Oh, aloha. Investors buy apartments for a lot of reasons, and this is just one of them. But with cap rates falling so much over the last few years, we've started to get worried. What will happen to our investments if cap rates start to climb again? So basically, a dozen years ago, investors were able to buy apartment properties with cap rates in the 7% range. In the last number of years, the cap rates have come down, but we called that sort of the awesome head trip range. In the last year or two, we've been in the totally hip range. But since the beginning of last year, almost 1/3 of all the sales took place with cap rates at or below 5%. That's potentially the busted kneecap range because there's a risk that that's going to hurt your investment if cap rates go up. So we wondered what that was, and actually the risk isn't as much as we thought it would be. There's a lot of reasons why cap rates will change. Mortgage rates are one of them, and that's what concerns us, although it never seems to matter. Mortgage rates have been consistently low and have been getting lower, basically, over the last few years. But we did an article in December called Cap Rates and Mortgage Rates. You might want to take a look at that on our website that talks about this in detail. So the key is, how well does this work for investors? A dozen years ago, when buyers were buying properties with 7% cap rates, they were also getting stuck with 7% mortgage rates, a lot higher than today. Still, they were looking at returns in the 12 to 18% range, depending on what they were assuming for net operating income growth. And one of the reasons for that higher rate of return is that the higher cap rate and mortgage rate suggests a higher rate of inflation, which is higher rent growth as well. So let's just take a look at a couple scenarios based on if we're buying apartments today. Over the last few years, basically with cap rates going down, investors have been in the sweet spot where you're buying, let's say, at a 5% cap rate and selling maybe at a 4% cap rate down the road. That's going to boost your returns pretty significantly. But let's just sort of work with the average cap rate that's in the market right now, sort of right around 5%. If you buy at a 5% cap rate, and you get, let's say, a 5% mortgage, you probably do a little bit better, but let's say a long-term mortgage, and you can sell 10 years down the road at a 5% cap rate, and that's the risk we're worried about, then you're looking at a decent return, sort of in the 11 to 14, 15% range. But what if cap rates go up? It's going to hurt your returns. If you have to buy at a 5% cap rate, but you're forced to sell at a 6% cap rate, your yields go down into sort of the 8 to 12% range. And even worse, if the cap rate goes up 2 full percentage points, you'd be looking at really a 6 to 10% return on your investment today over the next 10 years. So that's significant. But there's a few other factors to consider. First, the relationship between cap rates and mortgage rates have not been one-to-one. In fact, for every 1 full percentage point change in a mortgage rate, the cap rate only has to change by about a 0.5 percentage point for the overall return to be the same to an investor. However, part of that has been due to lowered expectations over the last 10, 15 years on the part of investors. They really are accepting lower overall returns today than they were anticipating they would be getting when they were buying a dozen or more years ago. But also, higher mortgage rates, which we think would translate into higher cap rates, also suggests more inflation. Inflation suggests rents will be climbing faster, which means net operating income will be climbing faster, and that will boost yields some as well. Also, higher mortgage rates will increase the cost of for sale housing, at least the monthly payment cost because of the mortgage. So higher for sale housing cost translates into more rental demand. Well, it looks like time for me to go for a swim. I hope you enjoyed this video, and you can look at the related article and see the charts in more detail. Can investors bust kneecaps and survive? I hope you'll come back again next week to see another weekly apartment market update. Mahalo.